Okay, good afternoon, everyone. This is Sanjeev Mota from B&K Securities. On behalf of B&K, I welcome all of you to this another fireside chat session, part of our Ideation series. Angel has been a fabulous story in the stock market, and even in this difficult times, actually continues to be pretty strong as a stock. I would like to welcome Mr. Dinesh Thakkar, Chairman and Managing Director of Angel. Sir, thank you for spending your valuable time with us.
Thank you. It is my pleasure.
Yeah. Mr. Thakkar, we also have Swarna Mukherjee, who's our head of non-lending financial sector. So between the way we'll do this is between me and Swarna, we'll ask all the questions. And if any participant has any question, they will post it, and then we'll try and make sure we ask those questions. So that's how we'll do it. And I'll start with more macro and strategy questions, and then Swarna will chip in as well. So, Mr. Thakkar, your journey has been really exciting in terms of where you started and where you are. Looks very different. Reasonably traditional broking setup, and now you are you call yourself Fintech, and it's not an unreasonable thing to say. In fact, you've actually as Fintech as probably any other stockbroking house is. But would want to hear, what led you to this change? You've been one of the few who managed to, in today's jargon, pivot yourself from, where you were to where you are today. So would love to hear how did this happen? What led you to this change? That'd be great to hear to start.
Sanjeev, very honestly, when I started broking way back in 1992, those were the era of scams and all that. But actually, I was always attracted towards technology. Those was an area where actually computers were making inroads. I used to feel that why we brokers don't use computers to create efficiency. As we all know, it was seller's market. Brokers rarely gave any attention to client. But coming from an kind of backdrop of starting this journey as a retail investor, I saw that empathy for retail was missing. So I started using technology, smallest piece like walkie-talkie set, which gave customer instant confirmation of the trade, what we should do in that outcry era.
Right.
Those who have seen Scam 92 would be able to correlate in terms of how trades were done very manually, orally, human to human.
Right.
But we were amongst first using technology, using computers. So I saw a big benefit of using computer, creating efficiency, reducing our cost, and creating a delightful experience to customer. Slowly, we progressed towards using internet, creating lots of data center across country. So although people may feel that we were physical and very traditional broking house, but we always used a best of technology in terms of servers, networking equipment, and all that. So we were able to go deeper into geographies of this country by giving terminals, by opening branch offices, which were centrally connected. We were first amongst brokers who built this web-enabled back office, which had an access for customer 24/7. Fast forward 2015, what we realized that because of Digital India campaign, which this government started, onboarding of customer became very easy. So people who were residing in tier 2, tier 3 and beyond, where bank-based broking house or brokers branch were not available, they got an access to market, easy access to market in terms of onboarding and trading in the stock market. That had created a thought that why don't we think about focusing on growing segment, which was very small at that time. We tried to work a dual model, phygital model. But what I realized that mindset of a digital broker or digital player is very different than a physical player. That is where we took a decision that we will close all our physical offices so that we are able to successfully transform ourselves to digital player. 2017-18, we took a decision to close all our branch offices and focus purely on building technological platform. That is where I feel that confidence came in that we can beat any digital player and we can be as or if not less superior to services that they are providing. And as we started acquiring customer digital, we were able to optimize our engine so that we are able to acquire customer at a much higher rate so that we don't incur losses and all that. And rest is history. From 2000, April 19, we pivoted to pure digital kind of like broking house. And from there, we have seen our customer base growing almost like 7x from where we were in April 2019. And when we started this journey, we were less than 10 lakh customers. And today, as we speak, we are around 82 to 83 lakh customer base. Not only that, we are able to attract lots of technology talent also. So I would say it is an evolving process that we shifted from physical to digital. It did not happen overnight. It took years of efforts to make our journeys digital, then acquire customer digital, optimize our cost, and this is where we are. And we're happy to say that we are amongst like top 3 in broking space today.
That's really great. So, I guess when, as any internet company, generally one asks like the total addressable market, so to say. If I were to look at the business model today, you are largely broking, but you've started doing other services as well. But if I were, if in your mind, if you were to look at next 5 years, obviously I'm not trying to look much beyond that right now, and let's say next 5 years, in terms of addressable market, one is in the broking space itself, and then second, what are the adjacent opportunities that you have, and if you can maybe some kind of, quantification may not be, but some kind of metric that you can give us to understand, what is potential growth possible in this whole market.
See, today, if you look at Indian market, hardly we have achieved a demat penetration of 4.5 or 5%. So still, I think a long way to go. If I look at countries like US, like UK, like Asian countries, when inflation was under control, they saw a big surge in demat account. They were also like in that same range of demat penetration of 2.5, and they went beyond like 15%. And US is like almost like 34, 35%. So what I see that we have just scratched the surface by like controlling inflation. Lots of youth who are new to vocations and careers and all that, they're getting their first saving, first conventional salaries, first income, and they have no other alternative but to put in asset class which can give a CAGR of around 14-15%. See, this new youth is able to like understand this market better because they are social media savvy. They check on website how people created wealth, and they are able to understand virtues of equity. Unlike previous generation who always thought equity market is risky, I think this generation have adjusted the fact that it is volatile, but lots of wealth has been created through this market. So I think that yet what we are seeing right now, it's at a very superficial level. We are acquiring customer, but we haven't gone deep into their wallet share. That is where I think there's a big opportunity beyond 5 years. Because if you look at the profile of customers that has come to the market in last 2 or 3 years, age profile is hardly like 28, 29. But if you look at their career kind of like life cycle, they have still 30 years ahead of them. So we believe that when a customer comes to this market, as seen in previous cycles also, they start with equity market, directly investing in stock market. But progressively, they go for building portfolios, they go for buying insurance products, and lots of other things. And being a digital player, I think that people get used to one app. And if we are able to capture profile of one customer and nudge that customer towards a right product, that is where we feel market will expand in a big scale. Because if you look at previous cycles, whenever this industry acquired customer and they tried to sell mutual fund or insurance, because the cost of servicing and selling that product was very high. So what happened eventually, salespeople, they started selling wrong product. So mis-selling was a big issue in this market. But for digital player like us, it is mostly emotionless. It is without any target. That app is trying to profile a customer, nudge a customer for a right product. Given that this is the first time that Indian population will see nudging towards a right product, I feel there's a big opportunity in terms of, first of all, market penetration going beyond 4.5%, 5% to around 15%. Wallet share, which I believe we haven't even like gone deep into. can go deeper than what it is today. Today, customer is investing around 10,000, 20,000, or hardly 50,000 rupees in a stock market. But if you look at their life cycle earning, so I can see that even if small amount comes towards mutual fund, insurance, and lending product, even lifetime value of a customer will increase from here. So there are two opportunities. One, broadening the market by acquiring more customer, getting them into this field. Second, going deep into their wallet share. I see a big opportunity for next 5 years, in fact, beyond that.
Right. And so if you were to break it down, let's take a case where today, and again, I'm not necessarily talking about Angel, I'll come to your numbers also. But if I look at, as you said, we've added huge number of new customers over last 2-3 years. If for an example, someone were to say that, okay, we'll stop at this number and this number doesn't grow, as you said, that's a growth and that also. You think that there is like a 15-20% growth possible in the business just by mining these customers and growing wallet share? You think just for the industry as a whole?
See, this industry has to go through some grind. So it is not possible that they believe that they would be able to see a CAGR of 15% just by keeping the same customer base. Right. Customer will evolve. As I said, that customer is quite young. So for this customer who is 28, 29, for that customer to go serious in terms of building portfolio will take 5 to 6 years. So if we stop at this, definitely CAGR cannot be 15%. It would be lesser than that. It will just grow at the rate of increase in per capita income, which would be hardly 7 to 8%. But I believe that opportunity lies beyond 4 or 5 years, when the same set of customers whom we have acquired, they will go into a next phase of their life cycle, that is getting married, going for family, acquiring house and all that. That is where we'll see a deepening of kind of like a market in terms of getting into wallet share of a customer. So I would say initial 5 years is a land grab opportunity where we'll be acquiring customer and increasing our customer base. Then next, after 5 years, it will be more on getting deeper into wallet share, where we are able to this customer to create a portfolio. Again, that will last for 25, 30 years. Then nudge him towards buying the right insurance, because you'll be taking lots of EMI products and all that. So I think opportunity lies beyond 5 years. Up to 5 years is land grab opportunity, where we have to acquire customer and try to bank on revenues that we get from an incremental customer and giving them a best experience, so that we are able to maintain our growth rate, plus at the same time go deeper into wallet share. That is an opportunity this industry has.
Sure. So if I look at last 2 years, obviously COVID kind of changed this, and not just in India, probably globally there was this move. So you, as you said, you've almost grown 7-8x in terms of number of acquisitions that is happening. So currently maybe 250 to 300,000 a month that you have been doing versus maybe 30,000 that was happening before that. But I'm just trying to understand whether you think, obviously we cannot draw a straight line on this now because this was like a step jump that happened. But from here, what are the events? Like, is LIC again another step jump potential, or what are the potential things that you see? Or now you're seeing that, okay, this growth that you saw in customer addition will kind of stabilize at a much lower growth rate level. What's your thought on that?
See, my thought is that if you look at COVID was a catalyst. Definitely, it helped to accelerate. But now that habit has been formed to come to the market and invest in this market, now it has like influence of people who are got into this market is quite huge in every pin code. Today, we are acquiring customer from almost 98% of pin codes. So what we are seeing in very rural places, market penetration is hardly anything. But what we are saying, incremental growth is coming from that pocket. COVID was everywhere, urban, tier one, but most of the growth is coming from the pocket who were never aware about virtues of equity, about how to get an access to this market. So what I am seeing is that industry is growing in that pockets where we never had an opportunity or never we had acquired customer from that pockets. Definitely issues like IPOs like LIC helps, because LIC has a deep penetration. And if they start marketing and creating like awareness about investing in equity, if they give a really good discount to retail investor policyholders, I believe our market is going to go deeper in pockets, rural pockets, which we have never seen entering the market. So I feel this opportunity, what started because of digitization or because of digital India movement, caught fire or accelerated during COVID. But momentum that we saw, which caught up from 16, 17, that's the reason we shifted from physical to digital, because we saw a big growth in that digital pocket, digital natives. That will continue. And this acceleration we started because of COVID has given an additional momentum. Until the time I think India reaches a demat penetration of 15 to 18%, I don't see this momentum to be slowing down. And after that, as I discussed, there's a depth to this whole customer base that digital players have acquired.
Right. Fair point. So I guess there can always be a few quarter here there where there could be stagnation, or these kind of quarters where the market is, where there's a war kind of situation where you may have, but you are saying that the inherent growth for next many years look pretty secular, is what I'm hearing from you, right?
Yeah, right. See, we have been talking about secular growth in this market, but I think biggest hurdle was inflation, that returns that people got from risk-free assets, from bank FDs and debt instruments. Now that era is gone. Now is an era where we are saying if inflation goes up because of whatever thing, it will maybe go up by 100 basis points. So that is not going to impact the people who are coming to equity market. So if you look at previous eras like 2010, 11, 12, or even before that, we used to see a cyclical kind of trend in interest that people got from risk-free asset. So they used to get in intervals, they used to get 8-9% from risk-free asset, where corporate earnings were growing at the rate of 6.5% in that 2010 to 15, and even prior to that. So I am not seeing those kind of returning back where people will get an opportunity to invest in risk-free asset and get equivalent kind of a return what they can get from equity market. We are expecting, because of reforms that we have seen in past 8 to 10 years, balance sheets of company getting stronger, government focusing on keeping inflation rate down, we will see corporate earning to grow at the rate of around CAGR of 12 to 14%. Compared to what returns people can get from risk-free asset would be hardly in the region of 4 to 6%. So I feel the secular trend, what we are talking about all these years, is here to stay and would be here for at least 8 to 10 years.
Right. So given that situation, if I look at last few and moving to a bit of competitive landscape, if you look at it, top 5 digital brokers have now become pretty large, maybe about 75% of the market. And people like Zerodha, Upstock, you guys, you have done very, very well. Some of the bank-based brokers like, maybe Kotak, HDFC haven't kind of taken this. Do you think, given the, size of the market, given where the growth is, you would start seeing more people enter this business, either bank-based or maybe even someone like a Policy Bazaar trying to do something like this? Do you see more competition coming in here?
See, I believe more than competition, I would say they are enablers who expand the market, and we need players like that. Look at our stock market. Primarily, it grew because of digital players. It would be wrong if 3 years back somebody had told that I don't need more players. More players means this under-penetration market will go away. We'll see more of people coming to the market. So if you talk about digital players who are selling some other assets, somewhere they will converge, because ultimately customer base will get used to buying more product on the same platform. All this company, I believe, will become a platform company where they will try to get all the services on one platform. It is I would say it's a kind of journey which will take its own time. We all are starting specializing into one product, but gradually we'll be offering multiple products to the same customer base that we have. The way we have seen Amazon, Flipkart starting as a bookstore and then slowly evolving and adding more product and services. So I believe all these people, digital players, are required to expand the market. See, this market, I would say, is complete in terms of growth when we are able to reach to even rural population who wants to invest 100, 500 rupees per month for their daughter's marriage, for education. Look at those population, they are very serious in terms of saving, but they are not aware how they can really compound their wealth by using this equity as an underlying compounding instrument. That is where I think digital player can have a really great reach and lots of educational programs, so that these people who are saving long term and are very disciplined, they can take advantage of ETF, which is much more diversified portfolio. They can take advantage of SIP, regular investment. They can take advantage of lending product. Today they are borrowing from money lenders over there at a what cost, I don't know, 25, 30%. So all this reach will increase only if digital players are able to reach them, expand the market. So I don't believe we have reached the stage where I would say it's in competition. I would say they are enabler who are expanding the market, and because of them, everyone is getting benefit because they're getting a market share from that expanded market. It may appear that 3 years we have expanded a demat account in a big proportion, but most of this expansion happened because of digital players. Almost a new market, 65 to 70% market is brought by digital players. Similarly, I believe when it comes to selling multiple products, all these kind of new age players will come together and would create a habit of buying insurance, buying mutual fund, buying lending product. Forget about that. Even CASA also, I believe, they have to start depositing money to a digital player. Then only efficiency and reach will come in. So I believe these are the players who will expand the market, and they are the future of digital India.
Sure. So one last question of macro, then I'll come to Angel's business model a bit more, which is on, if you look at, as we discussed that, you talked about CASA, and it's interesting that you talk about that. So obviously people like the banks must be wondering what next, because you guys may be actually taking away some of their market shares going forward, or maybe disrupting part of that market. And, banks are also, I guess globally that's happening, that most banks are now investing in fintech. So are you seeing, do you think that some of the fintechs like yourselves are even acquisition candidates for some of these large banks who may say that, what, we have not been able to build it, and probably we can't. So let's just go and buy someone out. You think that could happen, some M&A activity in this area?
See, I believe digital journey is very different than physical journey. I have gone through both the journeys. So the reason I closed on physical was that digital mindset is different, approach is different. Not that physical person cannot achieve success in both this segment, maybe. But what my experience is that if you want to really grow digital, if you think digital is a better proposition and better growth story, you need to completely change. You cannot be riding on both the boats. So I believe that future is of digital banking, neo banking, and all that. We are very optimistic about, if you know, India Stack has fourth layer, which is Sahamati, where we will be able to get information of a customer. Already lots of steps have been taken in that direction. But I believe once our regulator is comfortable with neo banking, allowing them to have a license without need to open branch offices, there will be a big disruption in that segment. We have seen this kind of disruption happening in UK after PSD2 regulation. Similarly, I'm expecting Sahamati is going to be a big enabler of disrupting this banking service. See, thinking that CASA will not come to digital player would be wrong. Nobody believed that people would start shopping big amounts on Amazon digital player, make payment digitally, invest in stocks, hold stocks digitally. Similarly, I believe today it appears that all that current and saving account cannot shift digitally, but lots of players are working on innovation. Lots of disruption is happening in that segment, and we are awaiting regulations to support all that kind of steps taken. So I believe this opportunity is quite big, much bigger than what we are seeing. And merger and acquisition, I believe, would be a bit difficult. What will happen that people who are into digital space, if at all they don't have any kind of component, there will be merger in digital space itself, rather than physical big player going for a digital acquisition. Although, as I said, it's too early to talk about that. But my personal belief is that digital player would be acquiring digitally and trying to get more services on that platform. And those kinds of players will become very big in 7 to 8 years. I would not be surprised to see a bank bigger than HDFC and ICICI or Kotak, for that matter, who is totally digital.
Wow. That's a very bold, prediction, I must say. So moving to your model, so in terms of client acquisition. So I guess digital client acquisition, you've talked about, I guess, in some of your TV interviews and so on about the whole AI ML way of doing client acquisition. But maybe if you can talk a bit about client acquisition, your app, what's the strategy? How are you doing it? How are you tackling the whole Bharat, so to say, so many different languages, so many regions? How are you doing all that? Maybe something on that would be great to hear.
Sure, sure. It is interesting that we started this journey of digitization way back in 16, 17. Initially, we started building robo-advisory engine, which we called ARQ, where we were able to advise customer based on profile, based on risk of a customer, based on their financial goals. And slowly we moved towards acquiring customer digitally. As we acquired customer digitally, what we realized that we had a set kind of like norms of acquiring customer in that physical era, putting advertisement in newspaper, television, and all that. But what we realized that we were only reaching urban and tier one, but pockets of growth were coming from tier two and tier three and beyond. So we started like optimizing our engine, connecting it with Google, Twitter, LinkedIn, and to our surprise, what we saw that whatever traditionally we believed, machines or acquisition engines were behaving very differently than what our belief was. So we were seeing we are acquiring customer we never thought that we would be able to make them profitable. So slowly we started like learning also. First we started learning, then we started making machines learn about what is happening in different pockets. Like for example, like color combination of creatives that we created attracted different population. Suppose red was popular in north, so maybe green was popular in south. So we tried to optimize our engine so they only realize that which color or which kind of message is working, is effective in any geography. So we allowed our engine to decide on their own. So we should take this regulatory approval in terms of bank of creatives that we used to give to the engine. And then engine is to cut, paste their message, their color combination, their vernacular language and all that. And slowly we saw that acquisition that we were doing 30, 40,000 customer a month went to 1 lakh, 1.25. Today, as we talk, it is 5 lakh. But believe me, most of this learning is done by machine on their own. So what we realize that when we are connecting our engine or optimizing with Google, LinkedIn and all that, their knowledge about how they have profiled their customer, how they help us acquire customer, how they work on different keywords, what is the cost, and then we backward do our work in terms of what revenue we get from particular profile of customer holding certain phone or certain age or belonging to certain community. We are able to optimize our cost of acquisition to lifetime value. So that is how we have built this engine day by day, I would say. It is not that we did innovation in a day. It was a kind of learning of my team, of what machines were teaching us, and what external world was giving input to us.
Right.
Now we are progressing towards building AI ML in terms of like how customer behaves on our app in terms of different asset classes. So we are coming out with super app where we are trying to learn from their behavioral habits, their income statements, how to nudge them to buy one more product on our platform. Again, this is a kind of like interesting opportunity, but very challenging to build all kind of like machine learning tools so that we are able to cross sell or upsell more products.
Right. And that's interesting. But also, sir, in terms of, you also mentioned that equity is not a very well-known product as such in the past. And I guess a lot of education is required. But that also means regional language education and so on. Like, how have you managed to do that?
Yeah. So we run lots of educational program. So as we acquire customer, day zero itself, we try to learn what this customer is doing on our app. If their customer is confident, as I said, that this youth, usually they check on social media, they watch some videos and they come to the market. But if we realize certain group of customer are unable to take their journey beyond or they are stuck somewhere, we try to show them good educational videos. We try to show them good education material which they can read and understand market better. If customer is doing something wrong, being aggressive in the market, we try to give them some kind of like reading material where they can understand how to approach the market. If they're trading in option, we create lots of kind of like automated product, what we call one product, what we call is Insta Trade. where a customer has to just say that what he feels about market up or down, and we will be able to show him good kind of an effective call and put which would replicate the trend of the market. So what we realize that we have to first of all understand who this customer are and what is their objective. Like as I said about Insta Trade, customer when he trades in option, retail customer particularly, he trades only for a day or two. So time decay is not important for this person. Theta has to be eliminate that from our formula. So we try to customize lots of learning. We try to nudge this customer so that for him or her, this market becomes simpler rather than complicated. Many times we come from this industry, we feel liquidity and that terms that we use is easy to understand. But when I talk to our customer, many times even like small statements, they are unable to understand. For that matter, we have to make it that language simple, which may not be like agreeable to you and me, that what words we are using in terms of explaining what this equity is. So what I have seen that this whole approach toward this youth is very different. It has to be very simple so that they understand this market. But what I look at, if you look at this equity for last 25, 30 years, it has given a CAGR of 14, 15%. So we feel that youth would miss a big opportunity if they are unable to get into this market. So initial 1 or 2 years, they will burn their capital. That is okay, because we are saying what they are earning in 1 year or 2 years would be very negligible to what wealth they will create in 30, 35 years. But we know we have to allow them, we have to empower them, we have to give them freedom to explore market the way they want to. But progressively, we have to nudge them towards products which are good for long term for them. So that is where our whole approach is, to make them understand equity. Initially, they may be taking wrong steps, and everyone does that way. I think majority of the people's journey in equity has been initially 1-2 years has been quite bad, including me and you, if at all you agree.
Yes, that's right.
So then we learn that, okay, we had to be patient. This as an asset class requires a different approach. Then we were able to make good wealth from this portfolios that we created. Similarly, I believe if we are able to give a right product to customer and explain this customer about equity in terms of education, videos, brochures, they will be able to get this thing right in a year or two.
Right. So one other interesting thing was on your revenue model. So I guess that has also changed, right? Earlier, as a for a broker, we used to think that value matters, but for you now, number of trades matter more than the value of the trade. If you can explain that a bit, how have you done that? What is the approach there?
That is very interesting factor. See, always when market is to go down, all brokers need to get impacted because customer would trade at a lower ticket size. Customer who was trading, say, 2 lakh, who just trade 20,000, 25,000. And because our model charge based on value of transaction, definitely our revenue will drop by 25, 30, and even sometime 35, 40%. But if you look at kind of like NSE's chart for number of trade, you will not see a dip in number of trades, even in eras like Lehman Brothers crisis, FI8, FI9, or even in an era where corporate earning was just 5 or 6%. That time also number of trade increased. So now we are insulated to a great extent because number of trade which declines with decline in the market is not proportionate. ADTO declines, but number of trade almost has grown, except for 1 year when SEBI come out, change this contract size of FNO. They made higher. Only in that year, I saw there was a dip in number of trade, that too to the tune of 15%. But because of regulation was good for retail, following years we saw a growth of 35, 40% in number of trade. So what I am saying that now that we have gone to flat broking model, flat fees broking model, we are more our revenue is connected more to number of trades, which is far more stable than ADTO.
Yeah. So that's good. So in a way, you're less cyclical from a market perspective. That market goes up, your revenue goes up, and so on, right? So and what about your costs in terms of tech spending and so on? You've always maintained, and last few conversations that you are a asset light model, and it's mostly an OpEx driven model. But in terms of spend on tech to keep up with what you are thinking, and even super app and stuff like that, what you're talking about, What does it mean really? If I were to look at next few years, what happens to the spend?
So, like, we are asset light company, but when it comes to investment spending on tech and evolution that we are going through, we are into that investment mode right now, and that will continue for more 4 to 6 quarters. In fact, I'm saying like one is that heavy investment model phase where we are uh, recruiting lots of tech talent, and we are investing hugely on technology center and all that. So I would say last 4 quarters we were into that phase, and we'll continue in that phase for next 4 quarters where we have to spend a lot to get up the curve in terms of what we want to deliver. Then comes an era where we have to just spend on maintenance. Same thing had happened in 2017-18. We were heavily into kind of an like investment phase, and by 2021 we were a bit lighter. Again, we have started investing in this tech because we believe now opportunity is multifold, because we can sell lots of multiple products. And fortunately, we were able to attract lots of tech talent from global companies. So we feel that we are in the right position to give a futuristic solution to what our population needs. So for 4 more quarters, I believe we would be into that investment phase. But having said that, because we are into kind of like scale, which is helping us to keep our margins constant, we believe that we would be into that OPM of around 45 to 50%, which we have maintained for last 4 quarters. So next 4 quarters also will continue to be in that margin range. But in digital model, what happens after certain scale, no, your margin tends to expand. So it's up to us. Either we like allow it to expand, or we go into some kind of an investment phase. So we would prefer maintaining our margin to the range of like 50% and spending more on acquiring more market share, getting high tech thing on our platform.
Right. That's great. Swarnab, over to you for your questions. I've taken a lot of time. Yeah.
Thank you, Sanjeev. Good afternoon, Dinesh. Very good to catch up again.
Thank you.
Sir, so I think my first question, I will just continue from where Sanjeev left. So basically on the talent side, so wanted to know how is the hiring part of the story tying together. So is the leadership team hiring now complete? And in terms of also otherwise the technical talent. So generally what we are getting to know that even in the current scenario, the IT companies are finding, hiring technical talent a little bit challenging. So what is the experience that you are facing on ground right now?
See, last 4 quarters, I'm talking about experience of last 4 quarters. So we decided to hire a good tech talent. That's the reason we went for a CEO who comes from a technology company. And you must be aware, Naran Gangadhar comes from like multinational company who has worked in Amazon, Google, Ola, Uber. And after that, we started recruiting M1 and M2 level kind of like people. So in that context, we have completed hiring M1 and M2, but now we are creating a bench strength in terms of lots of engineers which are required to work on different pods. So this 4 quarters will go into lots of recruitment at that level on engineering side will help us to strengthen our bench strength. So I would not say that we have completed kind of like hiring, but majority of the senior position have been completed. Now, when it comes to engineers and all that, still we think that lots of things have to be done in future. We are keeping in mind what plans we have for next 3 to 4 years. Based on that, we are trying to create a bench strength. So for current projects, what we have completed hiring. But what we are planning in future, as we spoke about third-party product platform company and all that, we think few more kind of like people are needed to complete the team that we have envisaged.
Right, sir. Good to hear that. That's very helpful. So then, as you mentioned that your for the current project, the technical team is complete. So considering the super app which is in the offing and will be, various journeys will be rolled out soon. So wanted to hear from you on the insight of basically the activation engine of your app. I mean, given the volatile market conditions that we are in, uh, how are you, focusing on activating your new acquired customers into undergoing the trade, or also maybe in future the various other journeys that you plan to offer them? If you can throw some light on that.
Sure, sure. One thing on Super App, we have been working on Super App since last 3 quarters, and we believe we would be able to launch it by say April or May, uh, which has a different architecture altogether. So initially, journey would be of our broking customers, where we would be able to identify, profile a customer. As I said, that we'll be using lots of data science in terms of capturing a behavior habit of customer. And based on our past learning that we had for customer, how we activated and all that, we are trying to automate and try to optimize the customer's revenue so that we are able to get a better kind of like a lifetime value of a customer. For example, when we acquire a customer, we believe that day 0 and day 1 is very important. So we try to work on journeys, which is very active when customer is acquired for first 48 hours. And then we believe that next 15 years is an opportunity or a window where you can activate a customer who has not traded with you or not started investing. So we try to learn about what this customer would be looking for based on whatever footsteps he has taken on our app. And we try to nudge this customer by giving some kind of like scratch card or some kind of like educational program or some subscription based service so that we are able to maintain activity of a customer. We don't want to lose the customer. Although in many cases, we don't see customer giving revenue for first 15 days or 1 month. But what we try to do, we see activity of a customer on our app, whether we have completely lost or still that customer is active. So for us, more important is not just revenue of a customer, but customer being active on our platform, searching for some content, looking at some videos. So we know that customer is alive and would be able to give revenue maybe today or maybe tomorrow or maybe after 6 months. So we have extended that kind of journey on our super app. Plus in super app, what we have done, we are trying to build more journey on mutual fund, journeys on insurance. Already mutual fund integration with AMCs and all that is complete. And I think we believe in once we launch this app by April around, by July, August, we'll be able to offer them direct mutual fund, which would be like very tightly integrated with their stock market journey. So we believe the super app is going to make a big difference in our business when it comes to selling third-party product. But initially, contribution from revenue would be less because we'll be selling direct mutual fund. But what we are trying to do is extend lifetime value of a customer beyond just broking service.
Okay, sir. Great to know that. Now, since you mentioned about mutual fund, just I wanted to ask you that is it fair to look at mutual funds also from a different context, that they could be a competition in terms of where the money flows for a retail customer? So whether that money is going into direct equities or, in a period of market volatilities like we are seeing right now, where making money out of trading becomes even more difficult, then do you see that some amount of market share being taken up by the mutual fund industry as in a way? I mean, one way to, of course, I think insulate that is through the distribution path that is there, getting built into the super. But wanted to know your thoughts. How do you see that, and whether it is a fair comparison at all or not?
See, first of all, this question has been being discussed in this industry since ages. That does entry of customer into mutual fund cannibalize a business of an stockbroker? My answer is no, because I have seen that people who come to the market, they have a separate. They are very clear about risk capital, what they have, where they want to take some kind of big bets and all that. But when it comes to putting their long-term funds, they prefer a mutual fund. They prefer a right, truthful approach, which was missing in this industry. That's the reason this mutual fund industry did not grow as much as it should grow. Because that truthful approach in terms of what is good for client may not be good for industry. So I believe that in this digital era, that will change completely. So I believe that people that who are investing into stock market are the one who would invest their long-term fund into mutual fund. If you are able to give that solution to customer in terms of whenever we see passive investment is doing better than active managed funds, or ETF is a better option for a customer, and if you're able to nudge without any cost, we don't have cost. See, in previous era, there was a cost of selling extra product. Today, it is not there. So I believe customers that we have acquired already, we are able to make profit out of that. But I believe this customer is not going to put full capital in stock market directly. So if you are able to get into that wallet share of safe capital, which this person wants to compound, wants to reach their long-term financial goal, we would be a better player and more recognized and more trustworthy for this customer if we are honestly able to nudge this customer towards the right product. Not only that, the same customer would like to buy insurance product from us. We would like to nudge this customer to buy term insurance wherever is needed and put investment into a right investment product. So we believe this journey has just started, but it's a long way to go. I think this industry has got, first time it has got an opportunity to be honest and truthful to customer. See, organization corporates always wanted to be fair to customer, but problem happened because of relationship managers, sales people who wanted to achieve aggressive target. So how they sold and all that, we always struggling to get it right. But in digital model, as I said, it is mostly like AI ML led journeys where we train our app what to sell and how to approach. It is an emotionless journey, which is more based on knowledge. So I believe there is a big scope of revenue coming from third-party product. It is not going to cannibalize. It is going to just expand and create trust of customer who would be attached long-term to every app what they download. So I see this opportunity to be expanding the market, not cannibalizing our opportunity.
Right, and you, I believe you are also entering the mutual fund space with certain products you have in mind. So that is also going to be a complementary part of the revenue.
Yeah. So we believe that it has to be open architecture. We are going to offer all the services. As I said, we are a platform company. But whichever services we feel it is missing, like passive managed funds, smart beta products, all that we would be offering as one of the offering. Not that we would like to promote that as an preferred service. It is one of the option because we feel that there is a need for in the market to offer smart beta product, passively managed funds and all that. And lots of new age digital brokers have applied for AMC, and their ideology and approach is same.
Mm-hmm. Yeah, right. Dinesh, my last question from my side before I hand it back to Sanjeev. So we have been talking all about the digital side of the story so far. Now there is a phygital part of business also in Angel, where this sub-broking or associated persons are there. That business, while although I mean, I think in terms of growth cannot compete with what the digital business is doing, and hence share is coming down, but that business is still continuing to fairly grow at a fairly reasonable rate. So wanted to understand your plans on this part of the business going forward. So can that be a pathway to enter into a slightly higher ticket sized customer segment, provide a more full-fledged wealth management service? How are you thinking about it?
See, I believe in India now that there is a set of population, say in the age group of 38 to 40, who have enough wealth and they require handholding. So they are not completely digital. They do digital kind of like execution, but they want somebody to talk to, somebody to guide. So we believe Angel can create a best model in terms of we have created a technology platform which we call NXT for the sub-broker, where sub-broker has a dashboard where they can see investment of customers and what are the right product in the market which they can offer. So we believe this segment is going to be there, although growth rate would be less. It is a high ticket size, which the sub-brokers can handle, but with the guidance of AI engine that we have built at the back end. So we believe that front end, what the sub-broker will be using will be same as the back end of our mobile app. But definitely customer who want handholding, want this to be narrated orally or handholded physically, or customer wants to visit their office, they'll be using almost similar services. So when it comes to like wealth management, I am a strong believer that wealth management has to get fully digitized, because I believe performance of a digital platform is emotionless and gives a better performance, if not inferior to what actually manage a fund or a portfolio manager gives. See, I'm not talking about few fund managers who are above par, but when we are talking about portfolio managers, I don't think that they have an ability and capability to really outperform the market in a big way. So what is important is that proper asset allocation in terms of volatility, in terms of profile of customer, which can be best done by AI ML tools, because we have tried it for last 5 years. The engine that we call ARQ, which we haven't implemented to retail in terms of portfolio management, we have tested it at a back end, and we are seeing performance of that engine without any human intervention is far better than any indices or lots of fund managers. So we believe when it comes to wealth management, if we talk about big wealth in next 15 to 20 years, would come from this youth. We are talking about GDP growing at the rate of say 6-7% with a real GDP growth of 12-13%. If I fast forward 20 years, a big wealth holder would be this youth who have started their journey with investing 50,000 or 1 lakh rupees. So they are the one who are to be captured at every step of life, not that when they achieve a good wealth, 5 crores, 10 crores, that is where we start wealth management. I think wealth management has to start with even a small ticket size of 5,000, 10,000. Look at the products like ETFs and all that. They are well diversified, and they can be designed in such a way that people can regularly invest and get an average price of market and average return of the market, which is quite decent enough. CAGR of 14-15% is quite decent enough. As we don't require fancy product. What we require is simple, straightforward approach for a customer who wants to start their journey with 5,000, 10,000, 20,000. That is where our focus is. Wealth management, even to this low ticket size, as low as 1,000, 2,000 rupees. So what I'm saying is that digital player have to really work on this solution, make it inclusive, that so that all retail customers are able to take benefit of this compounding that this country has to provide. At the same time, create a huge wealth out of this asset. So overall, I believe Angel would be in a model where wealth management would be for low ticket size. This is totally digital. B2B would be there, would be using the same tools, but only a physical interface would be given for people who are not very savvy on app, and they want some confidence in terms of talking to a person or visiting offices.
Right. Yeah. Over to you, Sanjeev. Thank you. Thank you.
Yes. Dinesh, my last question, and this is more a personal kind of question. If I look at next 5-10 years from your side, how do you see yourself, in terms of spending time on the organization? You have professionalized the organization quite a bit now. How are you planning to spend your time over next 5-10 years, and where do you see this? What's your end goal in this, Angel? So,
Sajid, very honestly, every 2-3 years, I believe that now we have achieved a professionalism. Now is a time that I should think about spending more time on passions that I want to pursue. But some of the other opportunity comes in which really triggers a kind of like anxiety that I can contribute more to this. And then I start looking at professionals who can take it forward. So I don't get into day to day, but when it comes to like getting initial idea about where our direction should be, so then I said, okay, more 3 years, then I would think about spending more free time.
Right.
And my wife says that I don't believe that you're ever going to retire. So I try to balance my passion, my professional life. But I strongly believe professionals have to take it over, because day-to-day grinding they have to do. But when it comes to ideation or thinking about future of organization for next 5 to 10 years, that is where I look into. I believe still I take lots of interest and I really enjoy all that. So I'm able to balance. I have a passion of driving cars. I really go on racetrack and drive. So I try to balance wherever I go, try to meet people in Fintech, try to meet people who are into cars and all that. And I'm able to balance it on day-to-day level. I have really forgotten that thing that I would be totally retiring from organization, because I've tried it 3 times. All 3 times I've failed.
That's good to hear, actually, because I think, as you said, this organization obviously is, I think has done amazingly well, and I can see next 5 years of great run. At least not by 5, as you said, much more than that. But I guess so. It's looking really amazing, and really all the very best to you, sir, in this journey. And if anything that you want to add that we missed out, any point that you would like to kind of talk about. So.
Sanjeev, when I look at this market opportunity and kind of in like future I see, I feel that our story has just started. So it would be very wrong on my part to say that I'm looking at 5-10 years. You'll see big disruption happening after 7-8 years, big disruption in banking service and all that, where all the small players maybe contributing a lot in terms of innovation and all that. I believe that India's story is going to be there for 20 years. And I think majority of the cream is going to come after 3 to 5 years. Right now, we are into that building stage. We are trying to build solution. APIs has just opened. Digital information is available now, and we can be more effective in terms of service that we are going to offer in next 2-3 years. Right now, it is just a land grab. We are just grabbing land. We are just acquiring customer. But to understand customer, give them a right solution, I think this opportunity is still 3-4 years away from here. And when that starts, it would be a big opportunity. It's similar like what I used to say about under penetration in this market. This market had a penetration of 1.5%, 2%. When it is going to trigger, nobody knew. But when inflation came into control, we saw a big surge from 1.5 to 4.5, which appears to be going towards 15%. Similarly, when it comes to wallet share, once we digitize all the services in terms of investment, in terms of insurance, in terms of lending, we are going to see a big opportunity never seen before.
Right. Great, sir. On that note, thank you so much for spending time, and wish you all the very best, sir.
Thank you. Enjoyed interacting with you all. Thank you very much.
Thanks.
Thank you.